Joining us from Los Angeles, we have Kirk Hartman, Chief Investment Officer for Wells Capital Management, where he helps oversee $200 billion in assets. Kirk, good to have you back once again. So what about the volatility in the markets? This time it's being brought on by, it looks like, more cracks in terms of this unity that we're seeing in Europe.
Well, all eyes are on Europe, and I think the market would like to see overwhelming force in terms of a resolution. Unfortunately, I don't think you're going to see that. I think the turmoil is going to continue, but again, all eyes are on Frankfurt this Sunday.
Okay, so remember how you said that time's going to be worse and we're going to keep kicking the can down the road until they find some solution. In your view, what can they say this weekend to, I guess, put some optimism back in the markets that things can be solved in Europe?
Well, I think they would like to see the European Stability Fund be increased or some kind of Euro TARP. I don't think we're going to see that. I think you're going to see some kind of statement that negotiations and discussions continue. I think there might be some temporary aid continuing for Greece as its debt service payments come due. I think the danger in all this, if the market gets too excited about some kind of overwhelming force response and it doesn't happen. This kind of reminds me of last summer when we wanted some kind of grand bargain about the U.S. debt service, debt ceiling negotiations. It didn't happen, and then the market was disappointed.
Yeah, okay, so what are you talking about then? The European Financial Stability Fund, that's going to be your focus? I mean, there's some talk that it's going to be 2 trillion euros, 1 billion euros, or 1 trillion euros, according to one of the German speakers. And then also the markets may be calling for about 400 billion euros. Does it matter to you how much is actually there?
Well, the size is important. I think the concern is that if Germany and France contributes to something like a $1 trillion European Stabilization Fund, it's going to reduce their ratings. We've already seen Moody's put France on watch, and I think the pressure is building. And so the concern is what's going to happen politically in both those countries. Can it get done? My view is it's going to take longer, and I think the turmoil is just going to continue.
When you say turmoil, I mean, you have Moody's slashing its credit rating on Spain for the third time yesterday. Now the banks have been downgraded as well. Italy, of course, as we know, already had its ratings cut. AAA for France may be in danger as well. Do you think we're already seeing signs of contagion? Is that what's going to happen in Europe?
Well, I don't think any of these downgrades are expected. And again, I think the market's pretty much priced it in. But again, the worry that I have is that people get too excited and that they expect it to, some kind of recovery or kind of resolution quickly. This is going to take a while. It took a while to get into this. It's going to take a while to get out of it. So I don't think any of these downgrades are unexpected.
Okay, so what's a knock-on effect then, Kirk, for the U.S.? We had the Fed Beige Book coming out saying that there is still growth in the U.S. economy, but concerns ahead, especially as we have businesses, pretty murky on the outlook for business spending, consumer spending as well.
Well, I think corporate earnings have been big and been pretty strong. And, I'm recommending the bigger companies that can do share buybacks, they can increase their dividends. I think there's still a lot of activity, and there's going to continue to be in information technology. If you look at companies like Apple and IBM, we obviously own them. I mean, everyone is saying, gee, they disappointed in terms of earnings. But if you look at it on the other hand, they're up 25% year to date. So they've had a pretty good year. And even their disappointing earnings, so to speak, are still pretty good. So I think that companies will continue to spend a lot on information technology. So I would recommend information technology and the big companies that can increase dividends and do share buybacks.
Right, and you're looking for high yields as well. Kirk, are you expecting maybe a global recession in the next 6 to 12 months?
Well, I think we've already had, in a sense, a global recession. I don't expect that it's going to be dramatic. If you think about it, we're basically break even in the United States year to date, and I would expect we'd probably be break even. Long term, I'm very bullish, but I think short term, you've got to be concerned and you've got to expect continued volatility.
All right, Kirk, thank you for your time today. Kirk Hartman, Chief Investment Officer for Wells Capital Management, joining us from smoggy Los Angeles, as you see.